whether, because L1 assets, level 1 assets, right? It's market prices in an active market. So how does that work in practice?
Yeah, so I think Amit touched on it a little bit that there's a line between level 2 and level 3, and when you get to something that you think might be level 1, things change, right? A company could go out of favor, trading should start to thin out, so you start to get stale prices that aren't traded on from day to day, and that's where your valuation policy needs to step in and say, this is how we're going to evaluate our quotes, and over a period, month to month, quarter to quarter, whatever it is, perhaps that asset starts as a level 1 asset, moves down to level 2, and then maybe even ultimately level 3. So your valuation policy needs to be written in order to handle situations like that, where you can evaluate period to period whether this asset should continue to be marked in the same way, or do we need to make an adjustment because X, Y, and Z changed.
Yeah, are there some parameters you look to see, whether something is actively or not actively traded? I mean, where do you draw that line, or how do you figure that out? Is there like a step-by-step method?
Not really step-by-step. I think it's firm by firm. Some firms will look at broker quotes, and they'll say, well, if we get 3 broker quotes, that's good. If they're all recent, that works for us. Other firms would say, well, we want to have 5.
Yeah, I mean, and to that I would add, right? I mean, again, one or two things which I mentioned earlier, right? It's also, are you getting those broker quotes consistently or not, right? Because one quarter you might get 3 and another quarter you might get 1. And it might start, it's something which you should evaluate at that point, that is it something which is broadly traded or not? And then it also depends on those brokers, right? Some of the things which we evaluate is are those brokers giving you the size, right? Is this the quote where they will do trade with you or not? Or is it just an indication based on their relationship with the deal team that they provided you a quote, but if you want to go and transact with them at that price, they're not willing to do that transactions with you. So size also at times becomes important. Then some of it is also, these days you get a lot of feeds from pricing vendors. And as you look at like some of the pricing vendor, for instance, like market partners, you can also get depth from them, right? Like, okay, if they gave you a quote, they might have got it from 5, 6 different sources. And many of them actually also have a rating system, which kind of gives you an idea about how meaningful or how strong this quote is. So again, these are the factors which perhaps you should consider. But again, it goes back to valuation policy, which some of it which we'll discuss at a later point, that as you are drafting your valuation policy, you should consider all these factors. You should lay it down. And again, valuation policy is not something which you do it day 1 of the fund and then it's somewhere lying in your hard drive somewhere. It's something which you should keep evaluating, because we are in a dynamic world where things keep on changing. So it's very important that you keep revisiting it based on as new scenarios come.